Here are 7 stocks you should be looking at to create your own Magnificent 7. Let's get started. Thanks for joining me today, Chris. We are here to talk about an exciting opportunity to kind of craft your very own Magnificent 7 stocks for 2024. So with original tech titans kind of experiencing a bit of a stumble, it's time to look at this new guard of stocks that are poised for remarkable performance here. We're talking from groundbreaking advancements in AI to cybersecurity to innovative strides in consumer goods and, of course, healthcare. So today we're going to cover 7 stocks that MarketBeat kind of suggests that maybe could lead your portfolio to victory in the coming year ahead. So, of course, let's start here with a performer with significant growth driven by the AI revolution. That's Nvidia. So given its current valuation, how should investors kind of weigh in its potential for continued outperformance here against the high expectations that's already kind of priced into the stock?
Well, thanks for having me back, Lacey.
Yes.
Yeah, this was a fun article to do, and Nvidia is the only stock on this list that is part of the original Magnificent 7 from last year. Some people might even say that that list has been trimmed down to the Magnificent 1, and that 1 is Nvidia. Had a blowout earnings report, shows that demand for its AI chips remains strong. The stocks had a little bit of a pullback here in the last week. Some people are questioning how high can the stock go. I don't think this is an AI story. I think this is becoming more of a broader economy story. There were expectations in January of 6 or 7 rate cuts, which seemed absurd at that time. Now we may be lucky to get 1. So we'll see. I think that's really the headwind that investors have to think about in terms of the stock price performance. But as far as whether or not you want to be in the stock, I don't think there's much question that you do, because again, this is not a question of is AI going to grow? It's just more of a question of is the economy going to grow?
All right, great analysis for that one. Now let's move along. We have Advanced Micro Devices, who is challenging Nvidia in the AI chip market. What factors here should investors consider when they're evaluating AMD's ability to kind of capture market share and its impact on the stock's future performance?
Well, you hit it right there, Lacey. We've talked about AMD a lot on this channel, and for good reason. Right now, again, the AI story is in place, and companies like Nvidia and now AMD are the companies that are providing the hardware that that businesses need to get to power their AI applications. Right now, businesses are looking for choice. They love Nvidia, they love the performance of the chips, but they would like some competition, they'd like some options. AMD right now is the furthest along in providing that option. The early results of their new chips show that they're exceeding revenue estimates. I expect that to continue, but again, I think this is becoming more of an economy story, but not an AI story.
All right, well, Palantir Technologies is next on this list. They've received a mixed response from analysts despite their solid earnings. So how can investors interpret these signals and evaluate Palantir's growth prospects when they're expanding their AI services market?
Right, so we're moving now from the hardware of AI now to more of the software of AI, and that's where Palantir specializes. That's where they excel. This is going to be a controversial choice. I know there's a lot of our viewers that love Palantir, a lot of them that hate Palantir, but I think if you're looking for stocks that are going to outperform in 2024, it has to be on your list for consideration. The big question for Palantir is going to be, can they live up to the ginormous expectations of growth that they have? So far, Palantir has climbed over every obstacle that's been put in front of it. We're going to know more. They report earnings, I think, in early May. That should really set the tone for the rest of the year.
Yeah, stay tuned for that. I'm sure we'll be covering their earnings report right here at MarketBeat. Now, cybersecurity is more critical than ever, as we know, Chris, and Palo Alto Networks is at the forefront of this. How might their strategic decision to capture market share translate into long-term value for investors?
Yeah, Palo Alto has been kind of an interesting case. They're looking to do a little bit of a different business model where they're trying to become more of software as a service company, or in this case, maybe you could say cybersecurity as a service company. They're
Mhm.
willing, excuse me, they're giving away some of their lower tier services to try to get more sticky of that annual recurring revenue that people love. We talked about Palo Alto just recently as one of the stocks that was seeing heavy congressional insider buying. That alone should be a reason why investors should keep it on the radar. But cybersecurity is a huge sector. It's going to be about as big as AI. In fact, we talked about it. We said the growth of AI is going to it's going to bring the growth of cybersecurity right along on its coattails, because for all the good actors and the bad actors that might be trying to do stuff with AI, you need the cybersecurity to combat that.
Mm-hmm. All right, well, here's one we don't talk about often, Chris. Monster Beverage. They've seen impressive growth. They're now expanding into alcoholic beverages. Tell us a little bit more about this one.
So I haven't been paying much attention to Monster Beverage, and it's really kind of a shame on me. I should have. The stock's up more than 92% in
Oh,
the
wow.
last 5 years. It's amazing.
Mhm.
This is a company that, the products kind of have a cult following, and the stock has a cult following too, but you can't really deny the performance. The company's been moving into the alcoholic beverage category. That was only a fraction of their revenue in 2023, but they expect that to be a significantly higher portion of their business. Some people might have put Celsius here instead of Monster Beverage. I give the nod to Monster just because of their track record.
All right, let's move along to Eli Lilly here. The
Yeah.
company has introduced blockbuster products with significant sales. Considering the stock's high valuation, how should investors assess the potential here for future earnings growth and the stock's price trajectory?
Yeah, so this is another story that I think the economy is going to have some bearing on it. The weight loss sector was a sector that kind of came out of nowhere. Even though the products have been around for a little while, they were primarily for treatment of type 2 diabetes, but now these GLP-1 products have been approved in some cases for weight loss. And that's the case with Eli Lilly. They have a product, Manjaro, which was for type 2 diabetes, but they also got approved for Zepbound, and that is for weight loss. So far, the company's been seeing tremendous sales of that. There's a little issue possibly through here with what's been going on with insurance pricing and different things like that. That's something that investors might want to watch for. One of the reasons why I like Eli Lilly here as opposed to maybe a Nova Nordics is because Eli Lilly just has a pipeline of other products, including cancer drugs and other diabetes treatments too. So this just looks like a very solid stock that investors are going to want to have in their portfolio for growth and for value.
All right. Well, last but not least, number 7 on the list, Booking Holdings. This one stands out as a non-traditional AI play in the travel industry. So with travel demand still going strong, how do lower interest rates and consumer confidence levels kind of factor into the growth outlook here?
Well, I feel better about this pick now than I maybe did a week ago when I put it on the list. I like Booking because I don't think demand for travel is necessarily going to soften. I think there's been some headlines this week that are going to cause consumers to change the way they think about how they get to destinations and where they stay once they get there. But Booking doesn't care about any of that because they're here to handle all of it. They're here to do your trip planning, and they've introduced some new AI tools through Kayak and other parts of their business that make it seamless. Again, this is just a stock that looks very expensive if you just look at the price. But when you look at the value and you look at the expected earnings growth, investors may want to really get in on this. Again, for investors that don't want to pay the high price for one share, you can get in on this with fractional shares. This just seems like a stock this might be the right way to play the travel boom right now.
As we've explored these 7 stocks, each of them kind of offer a unique opportunity, maybe some challenges for investors that are looking to diversify their own portfolio with these potentially high performers in 2024. So whether you are drawn to the cutting edge innovations in AI and tech, or maybe the essential services of cybersecurity, dynamic consumer goods sector, or even the promising developments in healthcare and travel, these companies present compelling narratives for the year ahead. So we'd love to hear which one of these stocks that you're considering for your own Magnificent Seven and why. So share your comments down below. We'd love to hear how you found this analysis useful, but be sure to like, share, and subscribe for more insights. Happy investing. We'll see you in the next one.